Hello, everyone. My name is Travis Delaney. I'm the CEO and founder of PayFi. We're a real-time payment processor that takes authentication and identity very seriously. I'd like to introduce my prestige panel here. I will introduce each one of them, let them, and then here in a couple minutes, we'll give everybody a chance to say a little bit about themselves and their background also. So first and foremost, we have from the Federal Reserve Bank of Atlanta, we have a risk expert, David Lott. Say hello, David.
Greetings, everyone.
Excellent. Thank you, David. Also from the U.S. Payment Forum, we have Randy Vanderhoff, which is also an expert in the payment and smart card area. Randy, say hello.
Hello, everyone. Thanks for joining us today.
And definitely not last and least is Sharif Sami. Sharif has a lot of experience, especially globally, as it relates to biometrics, authentications, and different methods, which I think will give us a nice, unique look at not only the U.S. market, but also the global perspective. So say hello, Sharif.
Hey, guys. It's a pleasure to meet you.
Excellent. Okay. So we'll get started here a little bit, and our discussion today, as the title says, is biometrics and the fight against fraud when it comes to payments. And so, when you say the word payments, so that means a lot of things to different people. Just like when you say biometrics, it means a lot of things to different people. So what we're going to actually talk about is a little bit bigger topic that is almost a precursor to the discussion of biometrics also, which is authentication. Really what it boils down to is when we're using biometrics in the form of payments, we're really looking to validate and make sure that we're dealing with the right person. Is the right person that's coming in? Is that identity? Are they known? Do we know who they are? Or, we want to stop things like man in the middle and different types of account takeover that is really rampant from a fraud perspective. But then we have to match that and look at, well, what are we connecting them to? And how do they get access? Do they have a valid access, and different ways of doing that? And this is, a foundation of trust that everything is built on. And that's what makes people feel comfortable to log in a site or use a certain application. They have to be able to know it's secure and be trusted. So when you think about the foundation of trust that authentication really bears, it's more than biometrics, to my point earlier. The landscape is really about different ways and different methods of validating that the person you're on the other end is who they are. Is this their actual account? What do we need to do during the workflow to make this a secure and safe environment? So, with that said, what I'd like for each of our panelists to do, and Randy, you can head off. Why don't we give a little bit about your background, and let's talk about, give us an indication of where your expertise lies in this matrix of authentication.
Sure. Thank you, Travis. So my background is I'm an industry association director. So the two organizations that I run is the U.S. Payments Forum and the Secure Technology Alliance. And so my role has been to bring industry stakeholders together, which are technologists as well as services providers and end users or adopters, to look at the trends that are making payment transactions more secure. And so the topic today around authentication and biometrics directly relates to my experience in working with the payments industry to try to bring a clarity on how these technologies get implemented and what are the best practices to move payment transactions forward in a fast, convenient, and secure way.
Great. Thank you, Randy. I appreciate that. Sharif, would you like to share your thoughts?
Sure. So my background is I've been 20 years in the payment space, focused on really the technology side of payments and implementation of different technologies around payments, whether it's mobile payments or EMV migrations in the US and so on. Also have a lot of sort of history around digital identity and device identity. The company I'm the Chief Growth Officer of Intersect, and that the Intersect is basically a company that's sort of in that intersection of digital identity and strong device identity. So very much around helping financial institutions enable their consumers to transact from anywhere, any device, leveraging the different tools that we have there to ensure a level of security and safeness, and also user experience as well. So very much ingrained in this topic, and happy to share my thoughts with the audience.
Thank you, Sharif. You know, and one of the things that Sharif just mentioned that I think is this topic is very large and broad, and we're talking about strong, you know, identity. Device identity, and understanding, well, what device are they on, right? So there's so many levels of validation there. And so there is a lot of what can be done and can't be done too. And so I'd like for David, why don't you share some of your background and where you come in and your interest around authentication, because I think, you know, your piece of it is really critical of what we can do going forward from an innovation standpoint.
Right. Thanks so much, Travis. And again, wonderful to be here with everybody. I'm the old man of the group, so I have a long history in the payments world. At the Federal Reserve Bank of Atlanta, I'm in the Retail Payments Risk Forum. We concentrate on primarily risk issues associated with payments. Most people think of risk with payments in regards to financial loss, but certainly there is operational risk, reputational risk, and compliance risk. With regard specifically to biometrics, Federal Reserve is technology agnostic, but we have done a lot of research, and I in particular have presented a lot of information with regard to the different biometric modalities and the pros and cons of each one.
Great. Thank you, David. Appreciate that. So let's get into it a little bit. Let's get into some of the detail. And really what it boils down to is safety, right? Security, safety, and doing transactions. And, you know, most users that are out there, you know, would contest if it has something to do with payments or money or their accounts, of course they want it secure, right? And then there's that odd balance you have between convenience and security. And, you know, but most part, people will take a look and say, yeah, well, security is the most important. But the funny thing is what we do find is their behaviors and their reaction to these different and new biometrics or different authenticating methods aren't always giving them those feelings, at least not yet. And so let's talk about that just a little bit. So when you look at this, this shows a number of different authentication metrics. Some of them are not necessarily biometric, but unlike standard authentication tools that typically require a username and password, you know, advanced authentication solutions aggregate digital data, including passive device information, behavioral biometrics, and network characteristics. And these solutions can apply the right intelligent response if you step through this process and understand where you want to be when it relates to the risk category of you know, how secure or unsecure. And it's a balancing act between your consumers and the type of customers that you're working with. Obviously, a 12-year-old is going to be different than a 55 or a 65-year-old. So my question for the panelists is this. From each of your perspectives, and David, we can start with you and go in reverse order this time. Is this chart a representative of what the best secure methods are, or is this just a consumer perspective?
Well, I would say I found the chart very interesting in that clearly it's a consumer perspective. And to me, it really illustrates the need for additional education by the industry in the consumer space. I mean, we know from a technical standpoint that facial recognition, vein recognition, eye scan in terms of being measured of false positive, false negatives is more reliable slightly than fingerprint. But I think consumers are used to fingerprint because of, you know, the technology with regard to smartphones, and that's been around a little bit longer than the facial recognition side of things. So I think that it just illustrates that need for additional education in the consumer market.
Thank you, David. Sharif, provide your thoughts. I mean, just my personal thought. Do you think that from a consumer standpoint, when they have people that go out with a jelly bean and hack a fingerprint password, does that deter their viewpoint? Because really it is just a perspective, right?
Yeah, and I think, and I agree with David. There's a difference between security and perceived security, right? And perceived security is very good when it comes to convenience, right? Is because these, if you look at these options, right, they're all very much convenience and frictionless, which is a big topic in our industry. The rule of thumb, being sort of on the security side of the house, is anything that is digital is prone to being hacked, right? And if I have any of these forms of authentication, which are very legitimate forms just on their own, security as a layered approach, right? You are digitizing your fingerprint, you're digitizing your face, the PIN code is absolutely digital, and your voice and so on. I don't know if anybody has gone on a website called Lyrebird, for example, right? Lyrebird is a company that came out of Canada, startup, and basically what it does, it takes 30 seconds of your voice and then it generates any command using your voice pattern as possible, right? And this is a company that's not doing anything malicious, it's just leveraging it, and you've seen deep fakes and so on. So the rule of thumb is anything that is digital can be, and eventually with the right tool sets will be hacked, right? And we as an industry need to cater for that. So it's not one size fits all approach. I think why EMV and payments, for example, works is that there's always this possession factor in your hand. There's this physical thing in your hand. Read your mobile device can be a physical thing. When you couple it with any one of these different authentication measures or even adding data and analytics behind that, you have more defense and depth. But one individual one of these on its own is probably more perceived security than anything else.
Very good point. Thank you. Randy, what's your thoughts?
Yeah, I agree with what Sharif just said. I really think that charts like these are more representative of people's perception of security. But I also think it doesn't take into consideration where and when these different biometrics modalities might actually be used. For instance, if you're standing in a grocery line, you might have a different perception about what's secure based on people being around you and being able to see if you're putting in a PIN number or entering a password or something, versus if you're home and you're quiet of your office and you're shopping online. I also think that these types of surveys, which I think are helpful to try to measure people's perceptions of grades of security. I think consumers, generally are not that motivated by seeking out more and more security. I mean, think of the hundreds of millions of transactions that are made every day with no biometrics, no password, no PIN, not even a signature now. And so, are we assuming that people feel like they're all operating in a less secure environment because they don't have access to these types of biometric modalities? So I think it's really more academic to look at it in terms of perception than it is in terms of practical implementation.
Randy, thank you. And that's why, its perspective holds so much. And if you really even take a look at this next slide, this says it all. Consumer confidence in traditional authentication methods. And passwords, people are used to it. It's that familiarity that they have with doing it. I've done it this way the same old time, so it's always been secure, right? Right. So I think when we look at these type of statistics, it gives us, at least some feeling of there is a lot of need for education and other things out there. So, but it does tie into friction, right? Consumer tolerance for this type of friction being introduced is getting less likely. And some of this is a generation thing. Some of this is the need for being secure, but it is perpetuated by businesses that continue to use these old versions, right? And so the data reveals that while there are pockets of uses of advanced authentication, businesses have yet to mount a concentrated, comprehensive adoption of this type of tool. PINs and password security questions still remain behind. So, let me ask the panel, is there anybody that you feel, what's going to turn this? What's going to make a business want to make that change?
Sure, I could take a stab at that. I think it's already turning. I think we're already seeing in a COVID world, for example, or in the need where COVID has demonstrated the need for us at least to be prepared in a digital world, right? To have the same level of advanced services we have in a physical world. Level of security and the level of sort of more advanced risk-based capabilities is required. And there's a difference between going in and buying something for $10 and going into my digital banking, for example, app and transferring $50,000, $100,000, right? There's a different risk profile here. So, and a secret question for one is good, but is not good for the other one. So I think as banks and financial institutions or even retailers moving more secure services and assets into the digital space, the need for a higher degree of layered security approach or risk assessment is becoming more critical. And if I even reverse that, right, having a more advanced authentication or risk-based approach is enabling financial institutions to bring in more services, which is what the consumers are demanding today. So it's definitely changing. It's definitely, and we're definitely seeing the conversations happen in the industry. The question is just what's sensible, what makes sense based on what I want to achieve as an organization, and where can I make the most impact? Because there's many, many different forms of security and authentication that is out there.
Okay, great. And so what you brought up was the banking side of things, especially. And what is interesting, from the same report from Experian, that customers do trust a bank that at least 66% wise that is more secure. So these are just basically saying is it security or is it low friction that really matters to you? And it's almost an even keel across the board. And the bigger report shows other countries and their feedback, and it's all really about the same. It's a balancing act, right? So customers do expect a secure and convenient experience that is secure, and then often are at odds with one another a lot of times of how you do that. And you see that with fintechs today. Some of us that will look at a fintech and go, wow, that's really unsecure what you're doing. And then others are saying, but look at the amount of adoption I have of customers using it. So it is a fine balance here. So the question, David, this question is for you. From your perspective, does the current regulatory framework cause difficulty in creating this, especially around the banking structure, or is it something else?
I don't really think so. I mean, if you look at the regulations from financial regulatory standpoint, there really isn't anything specific related to biometrics. Again, technology agnostic in the sense of there certainly is a expected level of attention to the secure data and things of that nature, which would include any biometric data, passwords, or any other type of personal identification information there. Certainly there are state regulations, particularly Illinois has a very strong biometric privacy, security legislation that's important, a couple other states as well. There's been efforts at the federal level with regard to biometric and data security, but really haven't gone anywhere. So, there's certainly that level of attention by financial institutions, but I don't think that it is an undue constraint.
Okay. Yeah, David, a lot of times where I've seen it just on our side has been around the BSA side of it. They get caught up more in the regulatory meeting that need than they do the user experience. So that's where you get this clunky feel a lot of the times in the banking app. And, you know, us, like many fintechs, are out trying to help banks to understand that user experience more so. So, Sarif, you know, from your viewpoint, you know, you deal with a lot of people in the market. Why do you think banks have challenges with creating a better user experience that is seamless but still meets security levels?
Sure, and I think, I mean, just to tag on to the previous point, right, as well, is definitely privacy is playing a big role in how banks and let's call it the industry is looking at this. And I'll give you a simple example, right, today. Today, a big part of the industry, how they create device identities, is they do something called fingerprinting, which they go into the device and scoop a big chunk of data. Some of it is personal data, some of it is not, right? Like your IP address and geolocation, other things are the fonts of the screen and so on. But what's ending up happening because of privacy regulations, the Apples and the Googles and the operating systems are clamping down on the type and the amount of data that companies can actually get to be able to generate those unique identities, right? So the other side of it from a privacy and regulations perspective is impacting some of the technologies that are out there. But if I sort of address your question directly around banks, right? I think financial institutions and banks are doing a balancing act. On the one hand, they want to offer additional services to their consumers, and it's getting more critical to do so. On the other hand, they need to reduce the technology complexity that they have in their ecosystems and sort of look at it more from a risk-based approach perspective, right? We're seeing a lot of advancements in banking technology and what they're trying to do. If you look specifically here in the US, banks are juggling with a number of things. One is they're trying to implement things like faster payments, right? And to do so, they need to rejuvenate their core banking systems, and the digital channel is becoming critical component of that, right? At the same time, plus making sure sort of that they're able to offer sort of financial services to their consumers, like financial well-being and so on. So it's very much of a juggling act between renewing the ecosystem to be able to support things like faster payments, and at the same time offering additional services to their consumers. It's definitely different grades and also different demographics of consumers that banks are having to deal with, tech savvy, non-tech savvy, and so on. So it's very much of a juggling act, but a lot of advancements in the industry today is happening around additional services and chatbots and so on.
Hey, Travis, if I could just jump in and add, because I talk to a lot of banks in the U.S. Payments Forum, and I can tell you that there's an internal tension between the technology side of the bank and the risk management side of the bank, because they're always, on one side, they're trying to be innovative and attract new customers and keep existing customers. On the other side of the bank, they're trying to reduce risk, and every time a new technology gets introduced, like mobile banking or mobile payments and peer-to-peer and other things, there's always that hesitation about how far do we want to stick our necks out to gain more customers, but not risk increased fraud losses.
Yeah. If I could just add to your point, Travis, about BSA. I mean, you know, certainly from a regulatory standpoint, but again, it's technology agnostic. That is a very critical compliance issue for financial institutions to know their customer when opening accounts and conducting business with them. They're required to have customer identification programs that explain all the different technologies that they use and convince the regulators that those technologies are being used in such a way that provides a very high confidence level of properly identifying that customer rather than a fraudulent identity. So solid point there.
Yeah, and I've been front lines on the real-time payment side. So, Sharif, you bringing that up is a good point, because what we've seen from a processing standpoint, working with banks, is a couple of things, and both of you clearly pointed this out, and it is risk management against technology or innovations. That there, you've got to be a risk mitigator, not a risk avoider, right? And so many banks are in this avoidance mode, not so much that there's a balancing act. So, that's been a challenge we've seen. And then the other side is, I forget who pointed it out, but it's really the policy structure, right, around BSAs and stuff like that. And if they've not been a payments bank in the past, they just use ACH. Now you're a real payment bank, but now you got to worry about TPPs. You got to worry about how do you manage the processes and oversee it. There's a lot to it. And when we get into things, selection of biometrics and some of these tools are not necessarily we provide, but another provider. So in some cases, it's like you get in and you realize you need a whole team really to renew that bank. So we've seen a lot of that. And so I think we're all echoing some of the same stuff. So, most consumers seem to be fine with the use of biometrics. And some of them trust them at different levels. This is similar to the other slide that we had before, but a little bit different. And this also comes in where we talk about behavioral type of items, which is a new thing on the forefront. We'll talk about on the next slide. But, Sharif, what are the biometric methods that you're seeing globally? Are you seeing this type of, what are you seeing from a global perspective? And then maybe we can look at the U.S. perspective.
Sure.
Maybe Randy or David can chime in.
Sure. So with the art of elimination, right, we're not seeing a lot of vein patterns as it currently stands, right? We're obviously, with the proliferation of things like iPhones and Android devices, a lot of it is facial biometrics and fingerprint and so on, which is sort of the mainstream in the market. Behavioral is becoming up and coming, and behavioral biometrics, basically, for those who are sort of unaware of it, it's the idea of passively in the background, looking at your behaviors, how you hold your device, how you move your mouse, how you sort of react in specific situations, that does analysis and tries to depict with a level of certainty, is this you or not? So that's becoming more interesting in the industry now. As a method not only to authenticate you, because it's very much more of an identifying you as an individual as much as they can, right? And eliminating things like malicious actors, for example, calling you and dictating for you to do something and so on. So behavioral biometrics, there's a lot of organizations toying with it, a lot of financial institutions playing with the idea, doing proof of concepts. So that's beginning to come out in the industry at the moment. But then the standard ones are fingerprint and voice and touch ID and so on. So yeah, so okay. Hopefully that sort of addresses a little bit.
So let's, I guess I'll throw this out to you, Randy. There's been a lot of negative press lately around facial recognition because of maybe the potential bias against certain ethnic groups or anything of that nature. Do you see facial as continuing to hold some strength as it's showing here on the slide, or do you think that it might go by the wayside like many things in this COVID environment?
Well, with the use of any biometric, there has to be a fallback for situations or individuals that are going to fail what's considered the standard, level of usage in terms of the biometric. Most people, when they transact, other than an in-person, face-to-face transaction at a retailer, are using a device that has a camera, it has a microphone, and it typically has a fingerprint or one or the other. So people have gotten much more comfortable moving between the facial and the fingerprint modalities based on what mobile handset experiences that they've had. I think voice is certainly interesting, but from things that I've read, it's got a long way to go in terms of false positives and false negatives. So I don't know how trusted it will be in the long run. And to my last point of having backups is, some people who might love fingerprints, might have terrible experience because they've got really bad fingers, or the type of work that they do causes them to have very difficulty in working on fingerprint scanners. People might like facial, but as you said, it might not work as well with certain facial characteristics, or now with COVID and people wearing face masks, they've suddenly realized that that's not a panacea either. So I think there's always going to be a need to have multiple biometrics modalities available to fall back on when the preferred or the most common one, doesn't meet the needs of the customer or of the situation.
Yeah. In lieu of time, I'm gonna go ahead. Sorry.
I was just going to very quickly add to the point. There was a bit of sensational headlines with regard to the stories about the issues of the facial tests that, without getting into the weeds too much, those studies really were gender classifications, not facial recognition research, and there's a big difference between the two, although they're basically capturing an image of a face. But, the federal government, with regard to Department of Homeland Security, the military has invested tens of billions of dollars in facial recognition technology, TSA as well. So the mask issue, as Randy mentioned, is really subverting that to a large degree. So we'll see if that's going to force a change going forward.
Yeah, and I think it's like saying that cash is dead. There's no tender that will win out. There will always be different ones out there in payments, and I'm assuming that biometrics will be similar to that. And so you'll have the people that the facial recognitions maybe work better for, depending on what they're doing. If you look at the temperature checks that's going on with COVID, that's a similar thing. It's really the same type of facial reader. And so when you look at those different things, it depends on the use case, I think, in the end. I don't know that one will ever live or die over the other one. But this was just basically showing some of the same things we were talking about with biometrics and how the confidence is higher with those type of things. And due to time, I want to make sure that we kind of push through this a little bit. There's just one more little slide here that I want to make sure we address, because there is a new type of capability. We're not talking about biometrics so much, but it's a card-based one, and I'll have Randy speak to that in a second. But is there a reason, or is there something we could do to help improve the adoption of these type of technologies? Any one of them can take a pick. With COVID, that has looked at ways that we can do things without touching, right? And maybe something that's longer term from a biometric. But how do we get adoption? How do we curve that adoption? So anybody want to take a stab at that?
So, you're talking about adoption of different biometric modalities, right? I think security is a layered approach, and to Randy's point, right? You need to be able to cater to different demographics and different needs. So you're basically providing financial inclusion, right? Adoption comes by ease of use, by the ability to have a service at the back of it that the consumers want, and a compelling reason to adopt, right? It took a very long time for our industry to adopt things like mobile payments because there was no compelling reason at the end of it, right? Am I changing my card, my physical card, instead of tapping a physical card, tapping a phone? But once you started adding things like loyalty, you started adding things like contextual commerce and so on, there became some compelling reason for retailers to implement technology and for consumers to adopt this technology, and we're still in that infancy stage still. So I think with anything, adoption comes by having a compelling reason and having the ability and having sort of a business case for the consumer to adopt the technology. And security and additional services that they would benefit from could be a good business case for from a bank's perspective.
Okay, thank you. So we are about out of time. I'll let Randy kind of speak a little bit to the card product, the new payment card biometric. There's a video here we weren't able to play, and I know there's questions to be asked. So we will collect those questions and get back to you individually. But in the meantime, Randy, would you like to kind of talk a little bit about mobile payments, or less, how's a chip card and come into play here? How's that work?
Yeah, so mobile payments and chip technology kind of came in around the same time, and they overlapped each other. And mobile and smartwatch technologies are great, backup options for when I don't have my card, or it's inconvenient for me to pay with the card, like if I'm at the beach or if I just worked out at the gym or whatever it is. But from a security standpoint, both technologies are very secure. Since we moved to chip technology, we've basically eradicated the whole counterfeit card problem, which is the major driver of card fraud. And so the difference in fraud security between a mobile payment transaction and a chip card payment transaction is not that significant, but if you understand the underlying technology, the one major enhancement in mobile payment technologies are the introduction of tokenization of the payment data when it's transmitted through the retail channel on the mobile device, which still doesn't exist when transmitted through the chip. Although there is a dynamic data element that's added on a chip transaction that makes that transaction unique and unable to be copied and replicated. Mobile then, is also more secure because it requires a biometric match of some type, either facial or fingerprint, in order to enable the payment transaction to happen on the mobile device, which doesn't exist today with the card product. But also mobile introduces one potential fraud risk area, which is that your mobile device has to be provisioned remotely and over the air. And there's been, some challenges, particularly initially, with concerns about having stolen cards being loaded into someone's wallet and being used and authenticated with the token and with the biometric, but it was a stolen card to begin with, and how banks had to deal with the provisioning process to make sure that wasn't going to be a new vector for fraud. Again, early in the adoption phase, that was an issue, but that was quickly addressed, and today we don't hear that much about that.
Okay, excellent. Well, we're out of time. Thank you for everyone for joining our session.